Thank you, and lovely to meet you all. And thanks, Luke. And for those that don't know, I mean, Fortitude are what we call very much a friend of FinClear, and so we've had an association with Luke and Fortitude for many years now, both as a service provider and Luke introducing shareholders, and even from a personal perspective, Ollie managing, helping me on family matters. So we're very well connected, and we very much appreciate that support from Fortitude. So, look, a little bit of, I guess, background to start with, and we've got a little bit. Are we doing? We're not. Oh, we are doing. Yeah, we are doing investor update. Yeah, of course. So, as it's twofold here. First is a bit of an update on the business, and so I'll run you through where that's at, because we do have shareholders in the room. And then secondly, we want to talk about where FinClear is going, what we're doing with FCX, because as shareholders you'll all be invited to digitise or put your shareholdings into a digital wallet, and so Dean's going to run you through that. And as Luke sort of said, we're going to talk a little bit about why we're doing FCX and what the end game for us is, how it's associated with what's going on with CHESS, and how we're deploying the technology. So look, from an investor perspective, just to give everyone an update, we made a significant transaction or acquisition last year. We acquired Pershing, which was our main competitor in the market, and that's given us fantastic scale. But it was also we acquired what was a somewhat problematic business. That was a business losing $15 million a year, and we as a business were just growing and approaching break even. So one of the first things we had to do was obviously stop that burn rate as quickly as we could. And we did that pretty quickly, and we integrated the business, and from a cultural perspective now it's all integrated. We're still running 2 technology platforms that is problematic for us, and I'll talk a little bit about that. But it's gone very well. We're in a new office, and we now have headcount of 180 people and growing. So the integration went very well. We continue to make key hires, and we've highlighted there our data strategy. So we're looking what the business has done is given us significant scale. And so really what we're talking about now are additional revenue lines that help us monetize that client base, and obviously bring significant revenue in. Data is one of those strategies. FCX is another one of those strategies. Technology talent is a challenge, has been, but hopefully it's going to start to free up in terms of what's going on. The revenue we guided, I think, in our last investor update towards the end of last year when we did a capital raise, we were talking about close to $50 million of revenue for the full year. It's going to come in more around that 45 to 47, 46 and change, somewhere around there. So we are going to miss revenue targets. Remembering we are a business that is very closely linked to financial markets, and markets the last 6 months have been very difficult. Activity has been subdued, and so our revenue is down on the back of that. Underlying EBITDA in the range of -$4 to -$5 million. Just to put that in perspective, remember we were getting to break even. We acquired a business losing $15 million, and we'll have consolidated for the year and lost $4 or $5 million. Just go back to one of my earlier points there, because we acquired a business running a different technology platform, and one of our challenges is that until the technology roadmap becomes clearer, and that's ASX and CHESS replacement, we actually can't merge those 2 technology platforms. We have to keep running two separate platforms. So the ramifications of what's going on at the ASX at the moment means we continue to do that, and that costs us circa $3 to $5 million. So if we could consolidate those platforms today, the business would be at close to break even. In terms of client onboarding and revenue growth, we have a very large global fintech. I think everyone, when you talk about global fintech brokers, everyone knows or has heard of Robinhood. It's not Robinhood, it's the next largest one to Robinhood that we've signed and will be coming on board towards the end of this year. We won a competitive tender for the largest advisor platform in Australia. So one of the very large wealth platforms, not quite yet signed, so we can't announce it, but it doesn't take too much imagination. They've been consolidating a heap of businesses over the last few years. We already service part of their business, and when we were asked to tender for it, we went, oh, this is a bit of a problem because if we don't win, we're going to lose that part of the business. Fortunately, we won and ended up winning the tender, and so that'll be a significant onboarding for us. Singapore FinTech, and then what we've done through the Pershing acquisition is look at all our existing clients who were all coming into termination of their contracts, and a big focus for us has been re-signing those clients to another 5-year term. But not just re-signing, looking at the commercial aspects of their contracts, making sure that we're being paid appropriately. One of the problems with Pershing when we acquired it was probably they were not charging appropriately for products and services. So one of the larger clients that we will re-sign, we hope to re-sign to another 5-year contract, will probably have an uplift in revenue of 25 to 35%. So that's good news. Gets us on to a little bit of FCX. So we're here tonight to sort of give you a demo of FCX. As FCX shareholders, you'll be invited to come on and open a digital wallet and be able to have access to the platform and see your shareholdings. Why did we build FCX though? Because it's a separate, we specialise in listed markets transactions. We're a executing, clearing and settlement participant, a infrastructure, a technology business. We built FCX, first and foremost, it's a solution to a problem that all our shareholders were telling us, that in unlisted private markets, there's no centralised platform capability for investors to see their shareholdings and to be able to transact and do capital raises, primary and secondary, to automate. And so FCX is first and foremost a solution to a known problem that all our investors, people like you, had told us. If we had access to a platform like that, how easy would it make our life? But it's actually an extension to that. What we're doing is we're introducing tokenization or smart contracts to automate order flows and to build a more efficient ecosystem. That's what FCX really does. And that actually applies to, or we think will apply to, our whole business over time. So I think it's fair to say when I asked my board over a year ago, can I go and build this, can I go and invest in it? They rightly said, well, it seems like a good business opportunity, but how does it fit in with what you do with FinClear? And actually it fits in with what we're doing in FinClear. The technology is aligned to what CHESS is being replaced with. It's not reliant on ASX and CHESS, by the way. It's a completely separate instance. But the technology that we're utilising will be the technology that markets will use in coming years to facilitate or make clearing and settlement, everything that we do, more efficient. And we're already talking to some interesting clients about opportunity in that space. So it's not just a standalone, it's very much integrated into our forward thinking and trying to be proactive around our technology stack.
So what the ASX is doing and what you've done, is there any crossover there? What are they doing?
Yeah. Good question. And I'll try explain it really simply because it is quite complicated. They are employing a language, a computer language. It's called DAML, and a ledger capability to replace CHESS. But they're not doing what we've done and closing the loop in terms of tokenizing securities. They're using that language just to replace a current ecosystem. And that's actually proving very difficult for them because CHESS is incredibly complicated. It's got something like 150 messages that fly around every day. It's not just clearing and settlement. It sends out corporate actions, company notices, dividend streams. All those pieces are what CHESS does. And that is proving to be very problematic for them. What we're doing is using the same language, but we're actually using the ledger to tokenize securities. So we're going one step further. They're using the language to replace a current ecosystem and language capability, but they're not moving it towards tokenization. They couldn't do that because they're not a registry themselves, and they didn't want to confront the registries and the custodians. So we're sort of building it from the ground up, so to speak, using the technology to tokenize securities and sit them on the ledger. They're using the technology just as a language protocol, if you want to think about it that way. And the reason that they're having so many problems and delays is because they're trying to keep everyone happy. They've got all these touch points that sit around ASX and CHESS. And so they're trying to work out, how do we keep the custodians, the registries, the trustees, the fund administrators, clearing and settlement participants, the banks, how do we keep them all happy in this ecosystem? Whereas what we're doing, on the other hand, is we're building it from the ground up. We don't have to make anyone happy. We're doing our best to disrupt all those people, because in my previous presentations you would have heard they're what I call the wagon wheel of service providers that sit around and just add layers of fees. We're providing an ecosystem that replaces much of that. And so, what FCX is, it's a marketplace, it's a settlement capability, it's a capital raising venue, a liquidity venue, but it's a more efficient, or we think, a more efficient marketplace or venue than potentially what the ASX are looking to replace. We're not competing with the ASX, we're not in that listed markets, we're very much unlisted and looking at opportunities in the unlisted securities.
So for anyone here who owns shares in FinClear, it's a pretty simple concept. You own a piece of the business of FinClear. What do you mean when you talk about tokenisation?
Think of it this way, it's a smart contract. All it's doing is taking a share certificate, if you want to think of it that way, or a HIN holding, and putting it on a DLT ledger, which is really a smart contract that lets functions be automated. So it just lets then buyers and sellers to automate exchange of a security, or then to provide other services over the top of that. So it's instead of having a HIN holding or a statement from the ASX, instead of perhaps having a paper share certificate, you now have what we call a token sitting on the DLT.
The token represents your share.
And the token is your shareholding. Yeah.
Another way of looking at a share certificate.
Yeah, pretty much. Did we finish on that? Just on FCX, I think worth a few things. I've just come back from offshore. I was talking to Luke before. FCX is a solution to a problem here in Australia, and we're very much running to solve that problem here in Australia. But the interesting thing is we continue to get endorsement around what we're doing here in Australia, that there is an international opportunity for us. And so that's really exciting for, I'm a shareholder, and hopefully for you guys are as well, that there is an international application, we think, for this over time. So first and foremost, we're concentrating on the Australian market, and we think that will convert that opportunity here in Australia. But there are other applications globally for FCX. Very strong pipeline of clients, and if you think about, that's the 6 o'clock, the 6 o'clock mood lights. Yeah. One of the things about FCX is that, and the reason we built it was we'd heard from all our investors, family offices, VCs, PEs, high net worths, that there needed to be a solution for this. And so now, as we've launched it, we have this fantastic pipeline. And so we're very confident that in a fairly short period of time, we will have a large number of corporates sitting on FCX. Other areas of growth for the business. Data, I think I mentioned earlier, we sit now over very large and growing amounts of data, and the opportunity for us to enhance our customers' lives or to attract other customers or to monetize that or to be seen as a thought leader are opportunities for us around data. So we've recently made a couple of hires. We have a new director on the board, Tracy Ahi, comes from a data background, and Stuart, sitting just here with us tonight, Stuart Frith, who joined us from Iris only a few weeks ago to help us with this initiative. So data is a big opportunity for us. Yeah, it was so yeah, and I probably should have given an example. We get asked quite often by Goldman Sachs, who's our investment bank, hey, can you give us some insights into what retail investors are doing across Australia? You provide service to all these stockbrokers and financial planners and banks, and surely you've got some insights. And yes, we do, but our databases aren't great and we don't really have the analytical tools to do much with it. So hence Stuart joined us, but so there's that opportunity. But also think of it this way, we think there's a very good opportunity with corporates. So if I, for example, could look at demographics across our whole client base, how old someone is, where they reside, what part of Australia, gender, and I could give, representations to corporates to say, well, your shareholder list and you've got activity, or you've been seeing activity recently from shareholders buying your shares here or there. It lets them look at their investor communications in a different way and how they might target investors as well. Could be very valuable to corporates. So that's what I think. We sit across very large parts of that data now. Cash is another opportunity for us. I'll just touch on quickly. I think it's fair to say 6 months ago, cash was worthless. Right? You had cash sitting in an account, no one was paying you anything for it. It's remarkable how quickly that has changed. And so from a perspective of managing our own cash, we sit on large amounts of cash to facilitate our business. So on any given day, we might be sitting on $130 million worth of cash, our cash, clients' cash. But by having that scale, how do we partner with banks to be actually to get an advantage for our customers in terms of cash rates? So what can we be offering through to our customers that perhaps don't have our scale? So for a Fortitude, for example, is there an opportunity for us to partner with a bank to be getting better bulk rates that we can pass onto our customer? Is the way that we're looking about it. Obviously, and enhancing our own cash position as well. So we'll move, and technology is ongoing. I think when we raised capital last time, we talked about monetising the technology opportunity, but we are very much a technology business now. If I look out across the floor, we're a manufacturing facility. What we do is manufacture contract notes or transactions, but we use technology to be more efficient around that. And we think there are lots more instances where we can offer efficiency technology to our clients, and so we're constantly building out capability for our clients.
Well aware we need to hear from Dean, but on behalf of shareholders here, some may be concerned that there's a negative EBITDA 4 to 5 million. Does that equate to negative 4 to 5 million cash flow, and can you see a way of, are you concerned about that? Do you want to see that reduce and go to positive? And can you talk about your balance sheet as well, and talk about plans?
Yeah. No, look, we still have very large cash reserves, and that is to our bottom line, and maybe the bad news to everyone is that we probably burnt more cash than that. In fact, we definitely did, because that's what we'd call an underlying EBITDA. It's stripping out costs of acquisition and integration of the acquisition, and it's also stripping out investment into FCX as well. So it's just from a standalone perspective telling you how the business has performed like for like. The good news is, as part of the transaction with Pershing last year, we bought a business that was losing $15 million a year, but we basically got paid close to $60 million to take it off their hands. And the rationale for that was, my pitch to them was, well, it's going to take me 4 years to turn it around. I want 4 years of runway of cash to support it. We demonstrated very quickly that it's nothing like that. Nonetheless, we continue to invest. FCX is a big investment for us, and we're going to continue to do that because we continue to see opportunities. We have no need to raise capital in the short term, but again, we're going to continue to be inquisitive, acquiring, looking at opportunities to scale and growth, and they may be M&A orientated, or it may be continuing to invest in the business. So at a point in time, we will need to raise capital, but we have plenty of buffer for now.
Sorry, just last thing from me, and feel free to ask questions, please, everyone. Is the net cash position, as well as sort of a timeline to an IPO, if that's still what you're ultimately looking to
Yeah, and net cash, you've got to think about it. There's regulatory cash that we must have to support our clearing and settlement and liquidity. But from a gross cash perspective, including that regulatory cash, we sit on $60-70 million of cash. And when we include client funds and bonds and brokerage, it gets to over $100 million of cash that we sit on any given day.
You say client's cash?
It's client cash, but we can use that for liquidity purposes. IPO, so two components to that. We said late last year when we raised some capital that market conditions prevailing, probably around this time and onwards, we would look at the company going public. I think it's fair to say market conditions have not been very kind. The last 3-4 months, 5-6 months in particular. And so it's probably off the table for now, unless market conditions improve. However, what we're doing with FCX, and if we are successful, or when we are successful with FCX, will be a marketplace and a liquidity venue in its own right. Because remember, we're building FCX to a known problem, and that known problem is actually ours as well. There needs to be a more efficient platform for unlisted securities, because there's definitely a dynamic in markets that companies want to stay private longer. Look at some of the very valuable companies around the world and in Australia. Canva obviously been getting a lot of press. They don't want to move into that highly regulated world of being a listed company for a whole lot of reasons, but they do want to have the capability for regular liquidity events, and that's what FCX is designed to be doing.
And for any investor who got in at $15, the recent raising at $15, how's the business changed, or how do the financials look versus at that stage?
Can someone give that man another beer and shut him up? Or actually, if you give him another beer or red wine, he'll keep asking questions. No, they're great questions, and I'm delighted to answer them. The best way I think to answer it is this, Luke. When we raised capital last year, we said we've just made this Pershing acquisition, this is what we need to do. There was probably quite a bit of risk around that. We just bought a business losing $15 million a year. And there were integration, there were all sorts of other problems, nailing down the client base, extending contracts, starting to build a corporate identity and integrating all the staff. I can firmly say that risk's off the table. we're done there. You know, you look around here today and the business is integrated. We've migrated clients. They're on the board, the platform. It's done. So we've taken that risk off the table. The revenue that we projected is slightly below, but we can account for that in markets. And so I would say we've delivered and de-risked the business. And so is our $15 justified? Well, look, I look at it this way. Markets, since we did that cap raise in September, October, have obviously come off pretty substantially. So sure, you would say $15 on a standstill basis, maybe aspirational today. The flip side to that is we've launched this fantastic initiative called FCX. And there is without a doubt an opportunity there and monetize that. We have a data strategy and we have and cash is starting to contribute as well. So I don't know. You know, we're a private, we're a public unlisted company, and there has been no secondary transaction recently. But I think I could make a very strong case that on a standalone basis, $15 would be a very fair representation of the value of the company today, which is maybe not such a bad place to be given what markets have done the last 6 months. And it could be higher, it could be slightly lower than that, but that's where I would get to. You might want to.
No,
so Steve's our corporate
I agree. I mean,
advisor.
I'm biased and I'm an insider, so I've had the benefit of being with FCX internally for a period of time. I'm having a lot of conversations with the potential counterparties. I just spent 5 weeks in London, almost exclusively meeting with a lot of people talking about FCX. So I've got, as an insider, I'm aware of what all these things look like. So, obviously my positivity around what the opportunities are for FCX, both domestically, which is much more tangible, and globally, which is a bit further away. But we're having conversations with very large global counterparties about using FCX, and these people have got better things to do than speak with little companies sitting in North Sydney, right? So all those conversations are genuine, and they're numerous, right? They're numerous, and they're names and obviously we can't talk to them because a few of them are under an NDA. So, at $15, pick your fortune. At $15, I think that underrepresents materially what the valuation of FCX is, particularly also as well as we do this, we understand more about just how advantageous this technology solution is compared to other non-DLT solutions purporting to do the same thing.
DLT? Digital?
Distributed ledger technology. Don't ask me to spell it though.
So I think, I think from a private company perspective, if you guys were sitting here as an investors and going, well, we bought into this company last year and the integration, the whole Pershing thing's gone badly, and these guys have had no vision around growing the business, well then I think you'd be problematic. But hopefully when you invest in unlisted companies, you invest in people and you invest in a vision and you invest in them delivering on both a current vision but also on future opportunities. And we think FCX is definitely a big opportunity for the business. And if there are no more questions, I think we go to a demo. We hand over to Dean. We want to talk a little bit about the timeline of what the build out of FCX looks like, and then I think we also want to go to a demo of what happens when you actually come onto the platform and how you build your digital wallet and do all those good things. So Dean, over to you.
Thank you, David. Luke, any more questions before we move on? Okay. Okay.
Tim, Cedric,
And guys, please continue to help yourself to drinks. And
and
don't feel like you've got to sit there. It's not a movie. It's not a movie.
yeah, please,
You're welcome, mate.
please feel relaxed.
It's
enough
nice to have such a friendly little audience. Last night, my audience wasn't so friendly, by the way. I had a crowd, I won't say angry, but anxious parents sitting here, I think 70 or 80 of them, because we were judging a competition. And they all obviously wanted their kids to win the competition. And so when I announced the winner, I could see that look on some of their faces, like, that's not fair. My kids should have won, right?
Okay. So I'll start off talking a bit about FCX and what we've built today and what we're building out over the kind of immediate period. David talked to some of the larger opportunities, and we'll touch on a bit of that. But wanted to start, I guess, with the problem we're solving. So private markets, private companies, especially within Australia, there's a lack of infrastructure. And I use an example to describe this. If today you wanted to go and buy 100 Telstra shares, there's apps, there's brokers, there's a very easy mechanism to go out and buy Telstra shares. You'll have settlement in a couple of days. There's an easy way to pay for them. The infrastructure's there, and FinClear is a big part of that infrastructure. If today you wanted to go out and invest in a startup of two young people running a new business out of a garage, how to go and invest in that business is much different. So the process to invest in a private company is often through paperwork, and I'm sure some of you have done that. I know some of you came in the FinClear raise last year where there were bits of paper being sent around for signature, where to deposit money, where does that money go, how long it takes, can be weeks to months before you eventually get a share certificate at the end of it, hoping your name's right on that certificate. So there's a problem there with that part of the market, and we really think that the infrastructure we've built solves a lot of that problem. So there's three core pillars to FCX. The first is the cap table platform. The other way to describe that is the share register. So there's companies out there like Link Market Services, Computershare, a number of others. That's my background. That's where I've come from. That can manage that on behalf of companies. So it's the administration of the register of shareholders, who owns what. And that's what we've built as the cap table platform for private companies. The FinClear register's on there now, and I think for the FinClear shareholders, you should have all received an invitation with a link to access FCX a couple of weeks ago, and hopefully you've been able to do that really successfully is my hope, and if you haven't, I'm happy to help out. But basically what that does is it provides for the company a good transparent overview of their register, but for investors, we start to build this place where you can manage your private investments, your unlisted company investments, in time other assets as well, all through the one platform. So when you need to go get details, documentation, all of it's centralized in this one place. As we've mentioned, it's on the DLT, Distributed Ledger Technology, and as I go through a demo, I might show you a bit more of what that means and why it's important for us and what we're going to be doing with it over time. So that's there live now. We're bringing on companies at the moment, and we hope to kind of have, by the end of this year, 50 or so companies on the platform and keep on growing that throughout the coming years until we've got a great ecosystem of the best Australian private companies on our platform. What we're building out at the moment is capital raising tools. So this is the ability to manage the capital raising from start to finish, where there is a process of a deal room, getting access to documentation about that company. So being able to log in, look at an investment memorandum, accounts, presentations from the company, looking at the investment, seeing what it's about, seeing if you want to invest. Then the process of subscribing, so signing paperwork, paying money, going through the workflow of getting to the end of the capital raise, and ultimately for the company issuing the shares and providing share certificates and other documentation at the end of the workflow. Sitting on top of the cap table allows us to do that all really seamlessly. So we're building that at the moment. I'll talk to the timeline in a second. Ultimately, we're building towards having a liquidity venue. So for a private company like FinClear is a great example, the ability to run liquidity events for existing shareholders to be able to sell shares, new shareholders to be able to come in and buy, pretty straightforward, right? But in Australia, there's a licensing regime. You're meant to have a market license to operate an exchange like that. The ASX is the prime example of a market in Australia. We're applying for a Tier 2 market license. And what that gives us is the ability to run these liquidity programs bespoke and really tailored to a private company and how they want to do it. What that might mean is they might run a liquidity program once a quarter, once every half year, once every few weeks. They might do a cleansing process of announcing results, announcing financial accounts, and then open up a window of, say, a week to run a liquidity program where people can come in and buy and sell.
And I'll just interject because that goes to your point before, Luke. If we're successful with this, then we'll be able to open that up and we'll be able to, say, start to build a book, because I know, for example, that some of my very long-suffering Fortitude clients who are also shareholders want to sell their shares because they don't like me anymore, they don't like the company, or they want to have a liquidity event, they want to go and buy a property, or they want to invest in some listed shares. All very, very valid reasons. And so because we know we might schedule a liquidity event. I know that some Fortitude clients want to sell $5 million of shares, but I also know, because I get calls from time to time, hey, are you raising capital, FinClear? No, we're not. We've got lots of cash. Well, is there any opportunity to buy shares? We'll schedule a liquidity event. And there'll be a book build, and then it'll be underpinned by the technology that Dean's describing.
Yeah, and I'll talk to that in a second. So the picture here that we're painting is that for private markets, we're building the full ecosystem. And what that does is it allows us to really control these events and provide a seamless execution. So we can take trade orders, we can execute those trade orders, we can settle and manage the cash flow through from seller to buyer and vice versa with swapping shares and cash. And I'll talk a little bit about how we do that, because that's where the ledger starts to come into play in the tokenizing of assets. What I might do now, and Reece, I might see if you can start to get ready to switch. I'll just talk to this slide first though. So this is our roadmap. So for these tools, we've got the first part of the platform live. We went live, we went into production a bit over a month ago with the FinClear register on. We've got another company on and another one coming on in the coming weeks. So we've just recently gone live. We had an announcement in and around April, which some of you may have seen. That was really a little bit early for us, but what that was, it gave us the ability to talk about what we were doing, get out into the market, start getting some inquiry about the product suite. And as Steve and David both alluded to, it resulted in a lot of reverse inquiry from private companies, VCs and private equity firms who have a number of portfolio companies they sit on top of that don't have a solution like this, but then into other asset classes as well. So the potential for managed funds, unlisted funds, and things of that nature, we had some really great engagement with. The capital raising toolset we're building out now should be ready around November per our current timetables. So we're building now, we'll be testing in about a month, and then they should be live from around November. And then that liquidity venue, because there is a build component to it, but B, the market license application, which working with ASIC can take some time, in a nice way of putting it, will be sometime mid next year.
Is anyone there yet? Liquidity side of things in unlisted markets?
In terms of having a license, so we'll be, as far as we know, we'll be the only Tier 2 license for securities in Australia. The other exchanges that can manage trading securities in Australia are the Tier 1 operators, which are the ASX, NSX, SSX and Chi-X, now CBOE. They're the only other four. So from what we've seen, unless there's someone else behind the scenes we don't know of, they're the only ones. There are some other operators that do bits and pieces of what we're doing. There's obviously registry providers that provide share registry services. There's some unlicensed platforms that can run liquidity programs. There's obviously various parties that can raise capital for private companies, but the full ecosystem, no, we think we're the first in Australia.
What gives us extreme or a lot of confidence around this is that, as Dean said, there are some smaller scale operations doing bits and pieces. We're already a very large systemic piece in listed markets. We've got a lot of people here processing transactions, bringing on board clients. What we're doing is applying that scale and also our trusted position with clients like you and the regulators, so highly regulated. We're now bringing that into unlisted markets, and that's really what's getting the attention of a lot of people globally, because there are smart kids everywhere in a garage, as Dean would put it, doing things with tech. And there are some great ideas out there, but there's no one coming at it from a highly regulated, trusted position, a systemic position like FinClear is. And that's what is really differentiating what we're doing.
Is this Tier 2 concept already out there, or have you invented this Tier 2?
No. So the regulator some time ago introduced this concept of Tier 2, and there are other Tier 2 exchanges in other asset classes, but not in securities. Now, some of the existing, so NSX or some of the other smaller listed exchanges have tried to go, well, we would rather go back into a tier 2, but the regulator said, no, if you're a tier 1, that's where you've got to stay. That's your life. But as far as we know, if we get our licence application in a timely fashion, we'll be the first tier 2 securities exchange.
Dave,
Yeah.
what about primary markets? How do they?
Yeah, and primary markets is one of the
Yep.
sort of smaller scale operators that we sort of allude to. If you think of what they've done, and look, we're not here to disparage competitors, but look, they recently acquired a registry business. So and that was a business that we had previously looked at. In fact, even before we built FCX, we went, well, should we just go and buy a subscale registry business and put it together with what we're doing? And after a lot of thought, we said, well, no, it's not built on the technology stack. It's not built on the DLT that we need it to be to automate these processes and to provide those efficiencies. So we ended up not going there. So in terms of what we do and sitting on smart contracts and the DLT, it's chalk and cheese between us and those sorts of platforms. And interestingly, we just had the head of digital asset globally and the founder, a New York-based guy, in here just a few hours ago talking about what we're doing and how far advanced we are and the opportunity, and giving us some pointers really about how we differentiate ourselves to other operators like that, because we're not particularly concerned about Australian operators in the US, though there's a business called Carter X and Forge that are similar businesses, but again, they're not using the technology that we're using and they don't have the capability.
And then the second board listing in the UK, sort of what you're trying to achieve?
Yeah, look, we call it a junior bourse or a feeder exchange. We think there's an opportunity in Australia to have a less highly regulated feeder exchange. So, to take us an example, when I founded the business 7 years ago, we went from just myself and one other shareholder, and we didn't need much infrastructure or capability. But as we've built the business, now we need to sit on a platform. We think FCX is that right sort of platform and regulated market capability. And as we grow, we may decide in 5 years' time that we've outgrown FCX and we want to go into public markets and an IPO to the ASX. And so you have that progression. Yeah.
But the second board in the UK, you've got to still have to have a prospectus and what have you to go into it. But you're suggesting that you don't need that. But then
there will still be listing requirements. So that's part of the regulatory world, but the listing requirements, the regulatory requirements will not be as onerous.
And just on that, I understand this stuff pretty well. So the AIM, which is the market you're referring to in the UK, it's actually more painful to list on AIM than it is the ASX. So what's happening in the UK right now is they're going, listen, what started off, and it's called the alternate investment market, what started off as something that felt like a good idea, creating access for smaller companies, is actually turned into something really painful anyway. So it's just a mini version of the LSE. So within the UK now, they're and lobbying. We actually need another form of license because this thing's turned into a pain. It's still not fixing the problem. And it's great that we've got the opportunity to do it in Australia, because in the UK they're lobbying to get that licensing capability in the UK. Because a big part of the private community can't avail themselves of that licensing because it's a complete pain.
But there's a clear, what Dean's talking about here and getting companies on the share registry doesn't automatically mean that you by default then go on to the liquidity venue, the exchange.
Yep,
when it happens, there would still be requirements for that company to be able to then go to that liquidity venue.
So I'll take you through the platform, and hopefully for some it's a little bit familiar. There are two views. So there's the view of the company or the corporate. So the CEO, the founder, the company secretary, if there is one, to overview the whole register and any of their corporate advisors or other partners. And I'll show you that that briefly first, and then I'll flip into the view of an investor, so someone that owns the securities or the shares. So when we set out to build this, as David mentioned, we built it from the ground up. We really wanted to make sure we achieved a few things with the cap table platform. One is that the interface was really efficient, easy to use, and clean. The data set of a share register can be viewed as something very simple, but can also be made very complex. And there are a number of platforms that I've worked with in the past that were the latter. And for no other reason other than that's the way they've evolved and been built out over time. So really consciously wanted to make sure we tried to achieve that clean and efficient user interface. The other things we wanted to make sure we did when we were building was that as we were thinking about how assets came onto the platform, so the best example of that is shares in a private company, that we weren't kind of closing our doors on other asset classes into the future. So when we bring on a shareholding onto the platform, there's a process we go through to make sure all the data is cleansed and clean as it's onboarded to the platform, so it sets us up for future events to happen, and we're not perpetuating errors as we transact on the platform. The other thing is companies evolve over time. So FinClear is a good example where you might start off with a share register of just ordinary shares, you introduce some employee securities, option plans, and some of these securities then start to bring in different requirements of how you need to manage vesting of options, expiry, what if an employee leaves and they need to be terminated. All of that set of features is very different to just managing ordinary shares, which don't have those kind of criteria. Private companies also often introduced instruments like notes, debt instruments, which we needed to account for as well. So the message we were trying to build in was that we wanted to be agnostic to the security class as much as we could be, so that as we start to introduce other asset classes, we don't have to rebuild anything on the platform. It's quite seamless as we bring on more and more different instruments. So this view is the company view, just insights into their register. So evaluation, capital raising history, what the makeup of your issued capital is with each, ordinary shares, options, whatever the classes are. We can handle basically all classes a private company would have in Australia. A snapshot of top holders, and then snapshot of key information. So some of this is derived off the FinClear register with $15 share price, things of that nature. Then drilling down into the investor database. So this is when the company needs to maintain the investors of who owns what, to capture from the purpose of the company has Corporations Act requirements to keep ASIC up to date with these are the people that own our shares, these are how many shares they own. So that's the details we're capturing in this screen, all the way through to transactional histories and elements such as documents and storage of things like share certificates, subscription agreements, general documents like constitutions, shareholder agreements, all stored in this one platform, so that when investors log in from their view, they can start accessing those documents as well. So really building out that centralised idea.
So at the moment, is there anything different to what a shareholder would see if they went into Link or ComputerShare?
Bits and pieces. So one of them is this documents feature. So Link don't have really an integrated documents feature. They do some things with like a capital raise where you can get documents there, but that's not then linked to your access to your shareholding over here. So little bits and pieces like that, yes. And the ability to consolidate and manage all of your shares as an investor is, in my view, much easier on our platform. And it's a bit more cumbersome on Link's side, and they don't allow you to update certain information, which we do. So we've tried to drive in a lot more efficiencies in then from day one. Remember, this is our first version of this platform. Over time, for instance, there's a feature which isn't on here, but we're releasing today, is around the ability for a shareholder to auto-generate their own share certificate. So if you've lost your certificate, it's gone walkabouts, you can log into the platform and generate your own new certificate if your accountant needs it or something like that. They're features that the other registries don't have. And
Pretty basic stuff.
pretty basic stuff.
But in the absence of it, it's a main
But
Admin with ComputerShare or Link around that stuff.
well,
well, we
there's a
on boardroom, you try and get a share certificate out of boardroom when you're doing your tax. Like, good luck.
and there's I'll just touch on a quick reason.
Nick's my accountant, he knows it better than me.
I'll touch on a really quick reason for that. Those registry providers have come from the premise that they're providing their registry platform to listed products. And listed products don't need things like share certificates anymore, because you go into CHESS and you get CHESS statements. So they haven't built for that. So when private companies go to use those platforms, those features aren't there. Whereas we're designing it the other way, going, well, what do private companies need? We're building those features from day one.
The fundamental issue is how do you determine, if it's not freely trading on the market, the value of a share? You've spoken of a book build.
Yep.
And is that everybody sort of at a particular time bidding, or have I got ahead of myself?
You have got a little bit ahead. We haven't built the kind of market features yet, but David, you want to talk to this one a bit?
The market feature comes in, but it will look very much like any other market, except what we call a pre-auction or a matching engine. Rather than being trading all the time, you'll have the capability, or the company first will have the capability to say, we're going to have a liquidity event on the 31st of this month. And we're going to schedule that, and the company then will release all the information that it needs to cleanse, so everyone's informed, so everyone can trade with each other. And then there'll be a functionality where you can say, actually, I think $15, from what I heard from Dean today, is a great opportunity. I want to buy some more shares at $15, so I'm going to go and put in a bid to buy $100,000 worth of $15. And you know, someone else might go, well, I think $20. I'd happily sell some shares at $20, so I'm going to put 10,000. And so you start to build that market. And obviously, if you get an overlap, well, then you know you're going to have a liquidity event, and that's the way it will work.
Yeah. Thank you. Yep, that's okay. So I've flipped here into the view of the investor. So this is now from a FinClear shareholder, for example, can log in and have this view. So this is our demo account. So we've got some examples of, over time, we want to build out more of these tiles which represent the different companies you've invested in. So this is that theory that we want to build this platform to consolidate the view across all of these private investments. I'll dig into one here. So then this gives you the transparency on the investor side, but basically the same information. So the cap table sits in the middle on our ledger in our data set. The investor side can log in and the company side logs into the same data set, and it's always in sync. So the same real-time access between the two parties, or two sides of that coin. That's okay.
The potential down the track that you don't need to float, because if this sort of technology takes over, everything's there.
Luke, you're reading my mind, Luke. That's my challenge. I've given myself that challenge for FinClear. You know, we can build this platform to manage all of this stuff, right?
No one else is doing this but you guys. You're creating liquidity and people, and there's a massive...
It goes to what I said before.
Advantages of being unlisted in this space versus being on the ASX or the NSX. What are the advantages for the management of the company, for the board of directors?
So to stay on us, can I answer first and then I'll pass over to you? So for a company, like I've used to work with my last job, I used to work with a lot of kind of small listed companies. So that kind of plus 2,000 end of the market, the really small ones. In 100, like if there's 2,500 companies on the market, I'm at the bottom end. $5 million, $10 million companies, right? And there's a few things that there's problems with them. So they're generally, cash flow negative, always wanting to raise, always needing money. The cost to list and the cost to maintain a listing are in the hundreds of thousands per year for these companies, right? And that's money they just generally don't have when they want to use that money to run their business. The other side of it's the regulatory compliance side. So continuous disclosure on a listed market is very tightly monitored by the ASX. So these companies that have a handful of employees working for them, trying to monitor what's happening in the media, what's happening in the world of Twitter and everything else, and information getting out there and having to disclose, it's really burdensome. So for these companies to have a more cost-effective solution and to have less burdens from a regulatory perspective, but still get the advantages of liquidity, and the other side of that again is do they really have liquidity on the ASX, these smaller companies? Is there that much transactional volume? So what's the advantage for them? Where we can provide a better liquidity solution with a better cost structure and better regulatory regime, in my mind, it's chalk and cheese.
I would add that those economics that Dean's talking to hold the company's up to a few $100 million right? Not 10. Dean's talking about 10 or 15 million,
Yeah.
which is like that's a complete no-brainer. But you know, for a few hundred, like with FinClear, right?
Doesn't make
last
sense for
valuation,
us
$500
yet.
million. That our user experience on this versus the ASX, it's completely different. And you as shareholders, you're getting the benefit because we're just spending less money.
Yep.
Materially less money. And Dave's out running the business rather than dealing with the day-to-day noise of being listed on a stock market that continuously trades. In theory, you've got to continuously report, but it doesn't necessarily continuously trade, and that's the anomaly.
Question, where is ASIC with all this from a regulatory standpoint? Because if you think about it, all shares should be listed with ASIC, and you've got like a universe of every single share.
Yeah.
And you cut a pie, and some's listed and some is not, and there's probably should be a framework that you're talking about that should say, well, if you're at a certain size and scale, should you really do all that stuff?
Yeah.
Should you not? Where are they at with this?
So we've engaged with them, obviously, with our market license application and work, and you know they've obviously got very good transparency over listed companies and who owns what, and they tightly regulate the ASX market, and that's a great area for them. There's a grey area in that private space because they do have records of each company in Australia has requirements to update the ASIC register of who owns what. Private PTY limiteds, they get a record of everything. Public unlisteds like FinClear, they get kind of a high-level snapshot. They don't get details drilled down into each individual shareholder name. So there's this grey area between, you know, the very small-end companies and then the listed market that they don't have great visibility over. So, you know, our indication through our lawyers is this is an opportunity for them to get some more regulation and some more visibility over that part of the market, which can only be a good thing from their perspective.
What we for the whole market from both sides of the coin, really.
Yeah, totally agree.
We've taken what I would call a heavy-handed approach to this. From our initial foray, it wasn't clear that we needed to go the full regulated exchange route to do what we want to do. But again, it goes to what our core business is and the advantage of FinClear. We're already highly regulated. We already have capital requirements and liquidity requirements as a company. We're already a trusted counterpart. It's not a stretch for us. Whereas other companies coming from scratch, to go to that regime would be a big stretch for them. It's not a stretch for us, and that's our competitive advantage.
I think also, for my sins, I used to work for ASIC.
So Stuart's running our data analytics program.
Commiserations.
I did many things. But I did for 2 years regulate the equity markets, or the entities that regulate them. We did a listing standards review, which was published, I think. Keep it focused on the ASX and something with FCX as well. But there was, and from my context, there still is a lot of pressure. So ASIC is less concerned about the private, the listed companies. They are far more oversight of, and they are consistently concerned to make sure that listed companies satisfy criteria and like standards. And that is
Can I take it off?
they want the gold standard. So kind of reduce that tail of 2,500 stocks because that's how many there are.
How many would be below 50 mil market cap, and are they somehow being targeted by you guys?
It's not a target market for us because that's, firstly, you know, we're in a good position where there's a whole bunch of very sensible private companies who just is sitting on a spreadsheet. So that's a much easier conversation, right? As a target market, that's really up to them, you know, with the fullness of time to go, listen, you know, do the numbers here, have a look at what I'm doing. And that'll evolve over time, but that's a big journey for them. So as business builders, we don't want to be sitting here going, we're going to go and pitch that market because there's a gestation period there of 1 to 2 years, and that'll happen organically anyway. And as they're going, well, hang on, there's all these companies listing on this alternate platform, look at what their cost structure is versus mine, the two should sort of meet somewhere, and maybe that's a 1 to 2 year journey, but that's not a target. It's a natural, sensible thing for them to be considering, but it's not part of our monetisation strategy.
There are opportunities, and we've received inquiries already, Luke, but you know, that the unlisted, and for example, we were talking to a company today, an unlisted company that just raised $100 million recently, $1 billion, that we hardly knew anything about, and there are lots of them out there. And the way that we're monetising these opportunities is not necessarily the registry. We're going to charge for it. It's not something we offer for free, but it's the liquidity event when they want to raise, when they want to buy and sell shares. That's when we make money from that exchange capability.
Can you talk about the economics then of the 1, 2, 3? The first one is the share registry, and whether you're a small company or $1 billion unlisted company, what's the revenue stream look like?
Yeah, so it's a monthly, so the cap table registry fee is a monthly fee. For the corporate, we're looking at $500 a month, just for the corporate. Yeah, $6,000 a year to come onto the cap table.
Share registry.
Yeah, to manage the whole thing. And it's just a flat fee. Every month it's the same. Then we go into, as David said, the transactional element. So if you go and raise capital, we're still building that and we're still refining that model, but we're looking at just a modest fee for the capital raising process to manage that on platform. And then the liquidity event is just a percentage-based fee of the amount traded, again. So trying to keep the structure very simple and very easy to understand, but you know, when we compare it out to some of the other providers globally and whatever else, we come in at a really reasonable amount. I'll continue through. So this is, so back into the investor view. So this is an investor looking at their holdings. Wanted to talk quickly on, because there's been a few questions around the ledger, the DLT, the tokenization, those words that we can give some meaning to in this context. So for this shareholder, me, they're not my real shares, by the way, but it's just a representation. Basically what we're seeing here is the two boxes down the bottom are a class of option and ordinary shares. And what's happening in the back end of that is when we onboarded this company to the platform, it created for each shareholder, their parcel of shares was wrapped in a token. So think of it as a wrapper, and that sat on the ledger. And the importance of that is we can program into that a couple of things. So the two things I wanted to highlight are ownership. So it's that record of who owns that parcel of shares as an immutable source of truth. So when you look at some other platform providers that just have a big data set, it's kind of a black box, all the data's in there, you're trusting that they know what they're doing and the records are right. Because we're putting it on ledger, it's the record and the source of truth that in time other parties will be able to access. So it won't just be us, everyone will be able to read and review that source of truth of who owns that token or that representation of shares. The other thing is we can then start to move around that token in transactions. So when there's an event of a liquidity event and you own 39,001 share, you own that token. So when you want to sell it into that liquidity pool, the whole token moves across to the person that bought it from you. And what that builds for us is this easy settlement capability where we can move the token from one party to the other because we know who owns them, and we represent cash on ledger as well. So when that person funds that purchase, their cash token moves over to you, and now you own the cash. So what it builds out is this settlement capability where we can immediately swap assets instantaneously. And it's an immutable record of the source of truth as to who owns each of those asset classes.
That's a big paragraph there. Does anyone want to explore that? That's amazing. So it's a switching of a token of cash for a token of shares.
Yep. And if there's no questions, I've explained it very well. No, it can be multiple. So there can be multiple parties. So this is the power of the smart contract. The smart contract can read the token, who owns it, what this transaction's about, and then it can manage the movement at this automated layer. So it can move one to multiple. And how it would do that is it'd break that 39,000 token into 4 parts, about 10,000 each if my math serves me well. And it moves 10,000 there, 10,000 there, 10,000 there, 10,000 there. And that's all automated.
No issue with part sale.
Yep, it fractionalizes it down to a whole share and then interestingly into portions of a share if we wanted to. So we can fractionalize that.
Bar shares on there, you can divide them up into all lots of little pieces and say those little pieces per share.
And one thing I just wanted to mention about ledgers and blockchains, there's there's obviously a lot of talk about that in the media, and there's cryptocurrencies and all of that. There's a big difference here between what we've built and what we're doing, as opposed to those types of ledgers and blockchains. They're public chains, meaning that there's no centralized, there shouldn't be a centralized authority dictating how things happen there. They're peer-to-peer, and purely peer-to-peer, and that's some of the problem. In our world, this is all within our environment. So we control it, we set the rules of how these things work, and we're just taking the best bits around who owns what, who's the source of truth, and who has access, all at our control. So there's a big difference between the two, and I just wanted to make sure that came across, because there's, you don't want to get confused.
So you decide the rules as FCX, but also the company decides.
Yeah, correct. Yeah.
So to clarify quickly, Dean, that's, as you've sort of hinted out there, Bitcoin and so forth, that's all public.
Yep.
You might not know,
Yes.
but it's all publicly available. Whereas this, you can lock it down, you can share, not share.
Yep.
Yeah.
Yeah, you give permissioned access to, and I'll talk a little bit about the wallet in a minute, but for a shareholder, you can give permissioned access to your ownership to, say, your financial advisor, your accountant, your spouse, maybe not, I don't know, but we can give that ability, and then we can also control who can come in and buy. So in that public blockchain world, someone from North Korea or something could potentially buy the asset class that you're selling, and you could buy from someone else who's laundered money, and you end up with an asset through an illegal program. Whereas we have a verification KYC program built into the platform, so we know every actor on there, and we can stamp out anyone that shouldn't be on the platform to make sure that where assets are going to and from are parties that should be buying them or selling them.
Again, goes to this is a highly regulated platform with KYC, AML processes to onboard companies, obviously, and it's been, hopefully you get a sense it's been run by a company that already is a trusted counterpart for transactions across listed securities.
So I'll give you, this is the view of the wallet. So essentially it's in a way of looking at it, it's like your investment accounts. So I might invest in different things in my personal name. I have a family trust structure with a corporate trustee, and I invest in some things through that. So each wallet represents each of those entity types. And then within each, we start to build out the portfolio. So I have different company investments within this wallet. These are my details. If I had 10 investments in there and I needed to update my address or something of that nature, simply update it here and it populates out to all of those companies automatically. Then I can give access to whoever I need to help me manage this wallet. So it's really just building out this. This is the gateway of as well when we have a capital raising event. If you wanted to buy shares through the platform, you'd be doing so through this wallet, so your investment account. And a big reason for that is as David mentioned, we've wrapped in the KYC to the wallet. So we've done a validation and a verification of that investment entity. We know who it is. So we're then comfortable for you to go and buy shares through that investment entity. I'll pause there because that's the end of the demonstration.
I think just on that, Dean, you maybe want to give everyone a bit of a verbal overview. What happens in terms of you'll get an email. You'll have to be, if you want to put your shares into your digital wallet, you'll have to be KYC'd, AML. There'll be a process that you'll go through.
So we've done the email. The email went out a couple of weeks ago for any FinClear shareholder. It should have had some instructions that went with it. So hopefully some of you have been able to access the platform. Luke, I know you've set up your wallet. So as part of that process
Gold
to set up the
star,
wallet,
you get the gold star.
Very easy,
but this is, at the very top we talked about we've just released this platform. So any feedback, we do want to.
I think it's something I picked up from Bitcoin that if you die, no one would know you owned it or you have it in your login. So with this, is it very important that you have someone there? It might be your wife, it might be your advisor, your accountant. You really need someone else. If you cark it, especially if you've got 10 private companies in there.
Yeah.
So what he's trying to say is he's logged in, set up his wallet, lost his password.
Yeah, we'll get you a password, but I know what you're saying. So the cryptocurrency world have that wallet concept that can be, they call it hot and cold wallets. I won't get too much into it, but you've got this key that gives you the access to that investment. And you hear stories about people that have lost a USB that had the key to their wallet that's now worth $200 million.
Yeah.
That construct of a wallet is not exactly the same as this construct of a wallet. Because this is our ecosystem, ours is much more in line with you own and you paid for that asset, and we know who you are, Luke, so we know that you own it. So if someone came along and said, you know, I'm in the will, I get this asset, and they can prove that, we can help them get those shares to their
We'll
name.
go through the same. I mean, I'm just going through this with Ollie at the moment. Sadly, my father died a few years ago, and we're reconciling some shareholdings and, you know, things popping up. You're on an ASIC register. Someone at some stage is going to notice, and then come back to the registry to find out, well, okay, who's the beneficiary and how do we transfer those and what do we do?
I can actually give you an on-screen example. So if there was, it's probably not a great example to continue talking about, but if someone did pass away and there was someone that came in as the, what's the word for someone that manages the will? Executor. So they would be coming in here as an authorised person, the title being the executor of that estate, and they can manage that wallet from there.
So the executive would know of the list of assets that's to be on there, like the Woolly shares, shares in FinClear, and they notify FCX.
Well, you know what, and it would even solve a problem if there's some assets they didn't know about, and they came in here and got access and proved to us they were the executor, they'd then find out about them.
To report to ASIC each day or each month who the shareholders are?
So it's the company has the obligation to report to ASIC, and it's at the point of time of change. So if they issue shares, they have 30 days to tell ASIC about the share issue or thereabouts. They don't have to continuously do it. We are going to build in the roadmap when we have time an ASIC integration, so the company can lodge their relevant form to ASIC whenever those events happen on our platform. But yeah, that's not something we need to as FCX absolutely do, but we'll help the companies do it.
Services.
I was going to say, surely that's the end game, is just rather than companies needing to push that data to ASIC, you just say, ASIC, you've got full access, go wherever you want.
Yeah, it's basically that. There's a connection, an API connection we can set up with that ASIC to do that. Yeah, it's the end game.
How much due diligence are you going to be doing, if any, on companies going to allow to use the platform?
So there's two aspects to that, and David alluded to it before. There's the cap table and bringing on companies to use our cap table. The process we've got at the moment is we're meeting with all these companies, you know, generally face to face or at least over Zoom. So we're at least doing a kind of eyeball due diligence with them, and we're doing a little bit of background to them. And it's also to who we're targeting. So we're targeting companies at the moment generally through VC networks. FinClear have a decent VC network and PE network, and we're able to kind of target the companies we kind of want on the platform, because a big thing is as we get bigger and evolve, when we introduce the liquidity venue and the other tools, we want investors to come along because they think they know we have great companies, right? So we're very conscious of that, and it's a manual process at the moment, but it's working. And then the other aspect, as David said, is just because they're using us for cap table doesn't necessarily mean that they'll be on the liquidity venue. So we've still got to refine how much of that process we can control. You know, that's part of our license application with ASIC. Can we say to some companies no because you're a Perth mining company, and you know that's not really what we want? You know, there's a little bit of work there.
Service, you know, one's a service, and we're being discretionary around that at the moment because we just don't want, and we've got limited capacity to bring companies on. But and then one is a regulated function going into a market, and there comes a point in time where we probably want to open up the floodgates just to that service, and we have actually a great partner with us that sits from an accountancy perspective. We think over about 60% of all unlisted companies in Australia, and so that floodgate could well be at some time where we want to get to significant scale. We want to get to 100,000 companies on there, because paying us $6,000 a year will be a nice revenue stream at scale for us, and we can automate it, and we can automate how they can come on as well. Maybe we won't manually bring them on board, but they'll onboard themselves, so put their own data into the system and manage their own cap table. That's a sort of self-service option that we may look at over time. But then that regulated function of moving to a regulated market, that's, you know, much like an ASX listing. There's got to be a process for that.
Maybe a follow-on from that question, is there any risk to, you know, someone goes to raise money through the platform for fraudulent reasons? Is there a risk to FinClear shareholders?
Yeah, look, there's definitely risks that we need to manage all the way through, and that's a good example. So, you know, there's risks that someone will use our platform that's, you know, laundering money, and our KYC program is designed to solve for fraudulent activity. So to make sure the actors coming into the cap raise process have had to pass through those gates before we can. And then the other one is this process, at least at the moment, around us making sure we're vetting these companies and meeting with them and making sure they are reputable companies before we bring them on. Yeah, absolutely. And part of that reason is to manage that risk.
But cyber resiliency is a great point, because, you know, they're one of the big risks. We manage networks already, and we manage networks for big banks as well. And so we have highly resilient infrastructure that is continually tested for intrusion. There's a word, I forget what it's called.
Pen test.
Pen test.
There's a pen test is what it's called, but yeah.
So penetration testing. So, and again, it goes back to why we think we're going to be good at this, because we, across our existing business, listed infrastructure, highly regulated, at scale, trusted counterpart with all the protections in place for that listed infrastructure. We're applying that into unlisted.
Had you already mentioned timing on when you thought that this would start to go live? Like over 100 companies are on the registry and then out to, I'm not sure if you've modelled out to how many you expect when it's steady state, 10,000 or...
Yeah, look, we've done a lot of models around it. So it is live now. The modelling around, you know, being a really good business for us doesn't take too many companies, because our revenue model designs are really around that transactional element. So if we have 100 really good companies that are the type of companies that might raise every 1 or 2 years, and then have shareholders that want to come in and buy, if there's a good percentage of those 100 companies that do those transactions on our platform, we'll make some really decent revenue from them. So we don't need to necessarily get to, you know, 1,000, 2,000 companies quickly to see good revenue through this business. Obviously, we want to head towards that, but the focus initially is getting on the good companies. And if we can get to 100 in a decent amount of time, that'd be great.